Good morning, afternoon, and evening, traders from around the world. I hope you all have been having a fantastic week so far in week 7, and you're ready to rock and roll going into week 8. First things first, before we jump on in, we need to make sure that we know what's going on, any news ahead of us, any holidays, etc., things that might be in the way and moving the markets around. And looking at the news ahead of us, we don't have anything on Monday. No medium or large news announcements. The next batch of news isn't until Tuesday, and that's going to be at 10 o'clock with Fed Chair Powell testifying, as well as the CB consumer confidence at 90.2 being the forecast. On Wednesday at 10 o'clock, we have Fed Chair Powell testifying, and of course, it's Wednesday, so 10:30 is also crude oil inventories. Previous was negative 7.3 million. On Thursday, the 25th, we have 8:30 news. It's medium news, but the preliminary GDP quarter over quarter. And then on Friday, February 26th at 9:45, we have the Chicago PMI, and then the starts of the G20 meetings, which is going into the weekend. So as far as the news is concerned, we actually have a decent flow of news. We've got some good movement, good news that is expected to keep things moving throughout the week. Although we don't have a ton of big news announcements, at least it's relatively spread out and fairly consistent. So with the fundamentals and stuff out of the way, now we can dig into some charts for week 8, and that's going to be from 2/21 to 2/27 of 2021. First up on the list is going to be the NASDAQ with some really good continuation to the upside. Nice spike in channel formation, still in the upper bounds of the channel. And for the most part, just kind of hanging out up here. It's not really doing a ton of up, a ton of down. It's really just sort of hanging out. Yes, we are getting some big moves, but in the grand scheme of things, it's really not doing a whole lot. It just kind of ends up being right about in the middle. At the moment, holding on top of the midline of that channel. And if the market is going to actually start pulling back, what better spot to pull back than the lows of the channel? That seems to be where the large moves are occurring every time we start cycling off the lows of that channel. And of course, this midline seems to be causing a lot of issues. Along with that, a few things that are kind of giving the market an underlying weakness. These highs going through the top have all kinds of MACD divergence causing some problems. And just realistically, it's very, very far up here, and it's not really finding good movement above the top. So realistically, buyers are going to be buying on the dip instead. Next up on the S&P, we have a very similar situation with a fairly obvious channel going on here. It is kind of almost an expanding megaphone in a way, where it started off kind of grinding its way further out, and then the highs were building further on the top. Now, we have gotten a little bit more information with these lows down here, and being able to copy paste that, transpose it on the highs, that gives us a fairly solid channel-ish to work with. But there is some expanding momentum going on here, while the market on the S&P is nearing into that 4,000 big psychological level. The big thing that stands out here, of course, just like we talked about in the NASDAQ, we've got some MACD divergence on the highs, not nearly as much of it as we did on the NASDAQ, and we are cycling off the highs of the channel. So although we do have this really strong move up, it looks like buyers are trying to get some type of wedge or even some type of flag formation going to the upside. But where we are at the moment is really high up here. It's going to be tough for the buyers to get going, and it's going to be a lot more opportune for the buyers to be looking for that dip back down towards the channel lows, or at least that's where the majority of value would start coming back in again. And then over on gold, which by far takes the award for the weirdest looking channel, we've got this really wide descending channel. And this one was a tough one. This took a minute to try to figure out where this thing came from. But looking across the highs, and now that I've found it, it's relatively easy to see. But man, trying to finagle a channel inside here that actually fit for longer than a few swings was almost impossible until I finally landed on this really, really wide, arguably kind of gross looking one. So along the way, while trying to locate where this crazy channel was, we did have some nice descending wedge formations going on here, and along the way, it held up pretty nicely. And that includes the bottom acting as support. But when we finally started landing down into the base, where we take that line from the highs and we copy it down on the lows, that's where we find all of that support lining up, and that's right where the market is. Along with that, we have 3 lower lows, and we have higher highs, or higher lows rather, coming across the bottom. It wasn't 3 successive. This one, the next one was a little bit lower, but realistically, it was still above the lowest point. And that still confirms divergences, assuming that the market can get continuation back to the upside. It is very overextended to the downside in the sense of market structure. They tried breaking down to the previous swing and completely fell flat on their face. So as long as the buyers can hold back above that area, it's likely that they'll try to get more continuation back towards the top of this crazy wild channel. And as far as crazy, wild channels go, or at least in a different perspective, we've got crude oil, which is just pinned to the ceiling and screaming higher. The market has rolled over to the 421 contract, so make sure that you're looking at the right one, in accordance to volume, obviously. But we've got a really good continuation to the upside, and along the way, the initial concern with this first pop higher was, is there actually strength here? We're seeing higher highs, but the MACD's kind of double topping, then we're getting lower movement to the next low. What's going on here? And then the market really solidified it with another break higher. And if you remember a week or two ago, we were talking about how they were forming the same thing here, where it was consolidating, and they were either trying to create a top where it was going to fall back, or it was going to create a breakout point where we started running back up towards the $60 mark. To be fair, I wasn't expecting $60 in like a week after that, but realistically, that's the kind of expectation that you see with this sort of move. And because of that move higher, we can also assume another very important thing. There are a lot of shorts that are potentially stuck. And if we go across from the bottom and we look at all of the volume that came in along the way, we can see where all of the assumably sellers' volume, and with the assumption that they're averaging up along the way, we can see where all of that volume came in once this loads up here. There we go. Now we got it loaded up. So along the way here, we have a increase in volume, which is right at the previous swing high. That makes a lot of sense. You would expect to see buyers who are buying down here taking profit at the swing high, and shorts who are looking to go with a continuation of the trend will be selling here because their risk is relatively small. The market broke above that fairly obviously, and then continued building a huge amount of volume around that $46 to $50 mark. And keep in mind, this is after a contract rollover, so these prices might be slightly different than the ones that we were looking at the time. But we do have a huge amount of volume that was built down here around 48 to 46. And then it broke back above the $50 mark. Now, we actually didn't see a huge amount of volume at 50. There was a lot, but the majority of the volume came in at 52.99 when it broke above. And we can see all of the time that the market spent there was right inside there. And that was enough to build that huge amount of volume, and then the market went back up again. So if the shorts weren't stuck back here, if they weren't stuck back here, if they weren't stuck back here, they're very likely stuck from here. And the next dip that you get after this kind of move very commonly allows the sellers who are stuck to get out, and buyers who haven't been able to get in along with the trend, well, to get in along with the trend. And that pullback is usually a little bit deeper. So as far as repetitious pullbacks, we do have the previous largest dip before the market went reversing back up, which is about 19% or so. And that would see crude oil dipping back down towards that big $50 mark. And that would make a lot of sense. And buyers, I'm sure, would love to see that price again. Then over to the euro, we've got a almost picture-perfect textbook wedge going on in terms of price going totally sideways. Very balanced inside of here and creating a very nice wedge. And with this wedge that's going on, we haven't really seen a break up or down, but we can utilize some of the previous market movement to our advantage. The market was ripping to the upside and more recently pulled back with two legs and now is seeing a higher low. So if the market does break above this, we would be creating an inverted head and shoulders, which usually means short term, at least, continuing to the upside. In the longer term, it's a reversal or a continuation of the pattern, at least, which would be looking for the market to come back down. So the anticipated move with this is you've got the head and shoulders, and then we see the market go rallying up. Now, at this point in time, we're still over here. But while the market's rallying up, that's the expectation, is that it runs higher until it finds an objective point. Once that objective point is met, then it ends up cycling all the way back down and even potentially breaks down through a new low. So by no means is this the last time we're likely going to see this on the euro. In fact, this is likely a precursor to a big warning that we're going to see this price again if it goes higher. If it does fail and the buyers don't get the move going back to the upside, then a lot of sellers are going to be looking to shove this right back down through the lows with the assumption that buyers are probably stuck. And then over on the cryptocurrency side of things with Bitcoin first, I can't even get this chart to actually fit in here properly without looking absolutely psychotic. But Bitcoin has gone nuts. We're encroaching on the $60,000 mark, and it just keeps going higher. Now remember, the big thing, the big shift, the thing that kind of put the wheels in motion, if you will, is when February broke to a new high. When we were talking about in January, February, the crypto, the effect that those months can have on crypto is typically a big blow-off move in January, followed by a lower high into February. And February, so far, obviously, has broken to new all-time highs, and that completely shuts down that structure. So even if it does start pulling back, buyers know that it's shifted, it's changed. This is no longer, January, February effect, it's probably going to pull back. This is the start of a potential larger cycle that could see Bitcoin continue rallying all the way up to 100,000. There are some estimates I've seen all the way in the millions, multiple millions. Obviously, that's nice to think about, but until we actually see the market get there, we might need to, maybe hold on a little bit in the nearer term. Gunning for the 60,000s, I think, is a very likely next objective. And then finally, over on Ethereum with a very nice continuation to the upside here as well. Really strong momentum. And again, a chart that really doesn't look quite right. Big thing that stands out here, while the market's grinding through the highs, we do have a very angular MACD divergence going across the top, which is suggesting that this flow to the upside is starting to get a little bit weak. A lot of buyers are buying on the dip, getting back to the highs, taking profit. Buying on the dip, back to the highs, taking profit. They're buying on the dips, get to the highs, but we really haven't seen that pullback yet, and that's really what we're waiting for. So if we're looking at this from a pullback perspective, the last couple pullbacks, that was 32%. The pullback after that was 26.5%. So realistically, if the market's going to pull back, it would make a lot of sense to see it start dipping into that 26 to 30% pullback range, and that puts Ethereum in around the $1,500 mark, which, to be fair, is a very big psychological point for the market to want to pull back to. And it also lines up really, really well with previous structure and the bottom of the channel. Alrighty, well that's going to do it for today and for the week. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic week of trading, and as always, we'll see you in the next one. Thanks.